All right, guys. I don't know how I feel about real estate right now. I see all the things happening with the FHA. I see some of them being positive. I see some of them being taken advantage of. If you haven't been paying attention, Trump has said to the FHA, I want to work with you guys on getting a 50-year mortgage set up. And I understand that process for first-time home buyers and people trying to get into a home. It would take a mortgage that essentially would be $3,000 and drop it to approximately $2,000 a month, maybe even a little less. Great. Now they can get into the house. Now they can afford it. They're also talking about, now this wasn't brought up by our president. This was something that FHA had put out that I had not heard before. Eliminating credit scores for FHA loan. Now, let's think about that real careful. Now, I do not believe in the credit system. I think the credit system is flawed in many ways. But what the credit system does tell you is if they're making their payments. Now, my problem with the credit system is you can make all the payments you want on time, but if you're overutilizing debt, then it's going to drop your score. Well, I know a lot of people that run their debt pretty well. They run it like their own bank account. And yes, they might have high debt right now, but they always have a way to buy it down. So I don't think that the credit score is completely accurate, but I do not believe that eliminating a credit score is good for anybody. My fear with that is if they start doing that now, in 5-6 years, we're going to have a whole lot of foreclosures. Now, if they combine that with a 50-year mortgage and people are buying homes now and the monthly payment is $2,000 a month, my other concern is now they're going to start bidding things up. We're going to get right back to $3,000 a month, but it's going to be on a 50-year mortgage, but with no credit score. I know that there's not a right way to fix this overall. I know that they're trying to do what they can. However, we have to be able to do it with stabilizing prices. We don't want to reduce prices. We don't want people to lose money on the investments they've already made. But we don't want prices to explode to the point of unaffordability again. And if we're saying that we're going to give you a house on a 50-year note with no credit score, those people typically are the ones that don't know how to bid correctly. And they just go, I want to buy a house and I can get it for this, so I'm going to put my maximum price. Where investors are the ones that are usually more reserved. They come in and say, nah, I'll wait because I know what's going to happen in a few years. So for the most part, what I think is if they do come out with the 50-year mortgage and eliminate the credit score, I see that a combination for a big problem. If they eliminate the credit score on a 30-year mortgage, I still see that be a big problem because the mortgage payments are too high. You're going to see a lot of foreclosures. I actually don't mind the 50-year mortgage. And the reason I don't find the 50-year mortgage is even myself, I would refinance into a 50-year mortgage because I'd still pay as if it was 30 years. I'd knock off so much interest. I'd be able to eliminate hundreds of thousands of dollars of interest on my house, which I think is amazing. Everybody's like, oh, 50 years, you're going to have to pay interest for 50 years. Yes and no. You can drop your mortgage payment now by something crazy like 10, 12 years just by making one extra mortgage payment a year towards principal only. Can you imagine if you dropped your mortgage payment by 30%, but you continue to make your regular payment you're making now? So the people that have already got their homes, they refinance on an FHA into a 50-year, and then they continue to make the same payment, their houses would be paid off very quickly. And let's say you're already 10 years into a 30-year. You refinance into a 50-year, your payment's going to drop through the floor. You could probably double your payment and still come out cheaper than what you're paying right now. I see a lot of different avenues that this can go. I do see a lot of benefits if it's utilized correctly. My fear is we haven't had the education to teach people how to use it correctly. I would love to sell more homes, but I don't want to sell more homes to end up in another 2008 situation. I would like to see what the process is for this. Are they going to just say, here it is, you take it or leave it? Or are they going to actually educate people? I'm going to be willing to bet that they're not going to educate people. Like, hey, we're giving you this opportunity. Here's what you should do. You should buy a home. You should utilize this. You should utilize that. But you should also understand your finances and be not over your head in debt already before buying the home. Now, I will say that they did say we'll eliminate the credit score. They did not say we will eliminate the debt to income ratio. So if you have high debt, they're going to assume you have a low credit score, and they're not going to approve you on that high debt. Your debt to income ratio, depending on where you're at, has to be, your housing cost can't be more than 30%. I believe your total debt to income ratio can't be more than 60%. In California, I think it's a little bit higher because they had to, but I would say speak to a lender. We have a great in-house lender if that's something you guys are interested in, and find out what the options are going to be. Now, none of this is finalized yet. This all happened this weekend, like last couple days this weekend. So we don't know where it's going. But I'd say stay tuned. I'll keep you guys updated as much as I can. As soon as I find out information, I will speak with our mortgage side and find out what our options are over there. And really, I think it's going to create a refi boom for people that own their primary residence, because if they could drop their mortgage or cut their mortgage in half, why wouldn't they? I mean, I'm looking at it myself going, well, if they offer 50-year FHA on my primary residence, and my primary residence I didn't purchase on FHA. I purchased that in a conventional loan. Now, if I go back and I refi under the FHA rules, just because they're offering that 50-year and I could drop that mortgage payment, absolutely I'll do that. Now, on the flip side, I have some calculations to do. I have a 3% interest rate. I don't know that I'm going to be able to keep that 3% interest rate, because I think we're in the 4s right now, the high 4s, low 5s. So how does that offset? And once again, if I take that extra money and I make that extra payment every year, or I make extra payments every month towards principal only, I'm eliminating that extra interest anyway. So I have to run the numbers to see how it fits for me. But if it fits, this would be a fantastic opportunity even for those that already own homes. All right, guys, my name is Tommy Sinclair. I'm the broker for Simple Sales. I appreciate your time. Please let me know if you have any questions in the comments, and I look forward to doing business with you, hopefully. We do have in-house mortgage company. We can help you with that. If you're looking to buy or sell a home anywhere in the state of California, we got you covered. And we also have our own escrow company in the state of California as well. So we could basically take care of you from head to toe, make sure that you're achieving the goal that you set out to achieve, whether that's buying your first home or maybe you're empty nesters and downsizing. We are lifestyle agents. We're here to help you improve your lifestyle. Thank you guys, and have a good one.